the bar for recovering to all-time highs is, of course, higher, but I do think the risk-reward is actually still positive here.
Tom Lee breaks down market trends, Fed moves, and recent volatility. Let's watch and see what's next.
You said 5,500 near term on the S&P. We got to that easily. Can you summarize what you've seen the past couple of weeks and what you think happened? I guess the peak tariff angst was hit when you said it was hit, and couldn't it come back still though?
Joe, I do think tariff fears can come back, but the stock market and I think the macro is in a better place today than it was on April 7th. One is I think that the tariff expectations, even if we don't know what they end up looking like, are really much better than what we saw on April 2nd. The second is that the markets that lead stocks, such as credit and the VIX and high yield, are in a much better place. High yield has recovered almost all the widening that happened since April 7th, and the VIX is uninverting the term structure, which basically means the market for volatility is calming down. And then I think when we look at 2026, I think there is stuff to have some confidence about because the economy is holding up better at the moment. And next year we can look forward to deregulation. I think the comparisons for earnings will be much better for next year. And then, of course, if we get some tariff policies that lead to exports, we have upside to earnings growth. So all in all, I think it makes sense that the markets have recovered to this point. But, the bar for recovering to all-time highs is, of course, higher. But I do think the risk-reward is actually still positive here.
Bitcoin recently dipped to $93,500, pulling back from its early May peak of nearly $97,900. While this short-term correction may have shaken some traders, the broader outlook remains bullish. Despite the pullback, Bitcoin has shown resilience near the $94,000 level, and institutional interest continues to pour in, keeping hopes for a $100,000 breakout alive in 2025. One of the most encouraging signs is Bitcoin's dominance in the crypto market, which has surged to 70%, its highest since January 2021. Even as new altcoins launch, investors are sticking with Bitcoin, viewing it as a more stable and reliable asset. Spot Bitcoin ETF brought in $4.5 billion in net inflows recently, and futures markets are booming, with total open interest jumping 21% since March. CME futures alone are holding over $13.5 billion, reflecting strong institutional demand. Meanwhile, Strategy, led by Michael Saylor, doubled down on Bitcoin with a fresh purchase of 1,895 BTC. The company's $84 billion plan is helping boost confidence in long-term upside. Although geopolitical tensions and trade worries have kept some investors cautious, all signs still point to Bitcoin having the foundation it needs for another big run, possibly to new all-time highs.
Yeah, I was thinking that too. You're probably thankful and gratified that we're back to where we are, but it just seems like there's some backing and filling that's going to be happening before we break out to new all-time highs. Do you think with the tariff regime as it is, some of the comments made by President Trump over the weekend that why would, if these are temporary, why would anyone build a plant here? So that some of them might be permanent. I still think it's negotiating. I'm still not sure I take that at face value. But if it's a permanent regime of tariffs, you still think we get to new highs in 2025 or by 2026?
Yes, I think new highs are possible this year. I mean, one reason is, companies have proven themselves to manage through shocks, and I don't think investors give them enough credit. That happened with COVID. Companies survived. Companies survived a bullwhip effect on the economy. They survived a surge in inflation. They survived the Fed hiking at the fastest rate ever. So I think this tariff shock, while it is shocking, I think earnings will probably outperform expectations. I mean, that'd be one thing. And then I think the things that were leading us down, whether it's Tesla or the Mag 7 or Bitcoin, they've begun to recover. In fact, as you know, Bitcoin's above its April 2nd level. So Bitcoin, I think, is telling us the S&P should recover towards the 5,800 level in the near term. And that's still upside from here.
Yeah, that was another one of your calls that it would catch up with gold and its it's lagged in the past. What about some of your good calls or accurate calls, Tom, have been based on inflation? And it's a real sort of a push and pull between what we're worried about with tariffs, which would theoretically, restart inflation, even if I don't know if restart's the right word. Maybe there is some still left in the pipeline. But oil, I just always think that the most important factor in inflation, which ripples through everything, is oil. And you look at oil, and I think that could counteract a lot of what we see, maybe even not only offset the tariff inflation, but actually be more important. So what's the Fed do?
Well, I agree with you, Joe. I mean, the two leading indicators for inflation should be, like you said, commodities, and oil is telling us inflation is weaker. And the labor market, the JOLTS data shows the job market's not that strong, so there's not really a wage pushing inflation. And I think the inflation data recently shows inflation is tracking lower than expected. The Fed has been on hold, and they're saying they're waiting for tariffs. But what's interesting is the ECB has been cutting rates, even though there's tariffs, inflation hitting Europe, or soon to hit Europe. The reason is ECB's inflation measure, the HICP, exclude shelter. If the Fed excluded shelter from its core inflation calculation, it's lower than Europe now, and yet Fed funds is over 225 basis points tighter than Europe. So I can actually sympathize with the argument the Fed should be cutting now, even if we don't know the effects of the tariffs.
BlackRock has quietly made a massive move in the crypto market, scooping up 41,452 Bitcoin for its iShares Bitcoin Trust ETF, IBIT. Valued at approximately $3.92 billion, this purchase highlights growing institutional confidence in Bitcoin, especially at sub-$90,000 levels. While Bitcoin is currently trading around $94,240, it's clear that major players are positioning themselves for what could be another explosive rally. Despite the recent pullback, data points to increasing investor activity. Bitcoin's network usage just hit a 6-month high, with over 925,000 unique active addresses, signaling renewed interest and engagement. A bullish MACD crossover has also been spotted, suggesting upward momentum could be building. Analysts now believe another test of the $100,000 level is likely, with even higher targets within reach. Adding fuel to the optimism, Standard Chartered predicts Bitcoin could hit $200,000 by the end of 2025, a bold forecast that reflects broader market confidence. At the same time, the number of BTC holders sitting on losses has dropped significantly, reducing the pressure to sell. With institutional support growing and market signals flashing green, BlackRock's quiet accumulation might be the start of something much bigger in the months ahead. That's all for today's video. Until next time.